Hello, Bison. I'm Sharon Strange Lewis, Director of Alumni Relations at Howard University. Thank you for joining us for today's important Bison Roundtable on student loan forgiveness. Student loans offer a pathway to education for many students of color that may not otherwise exist for them. However, post-education, many are finding it difficult to repay the mounting debt accumulated to secure their degrees. Howard University's Director of Financial Aid, Dr. Robert Muhammad, will moderate this important conversation with experts who have information about programs designed to help. Dr. Muhammad, without further ado, let's let this roundtable begin.
Thank you so very much, and good afternoon, everyone. We're going to have a wonderful, engaging conversation this afternoon. Our panelists are Tisa Silver Canady, who is an author and a financial wellness expert, and Mr. Ricardo Jefferson, a student loan ombudsman, with the District of Columbia. So we're going to talk about loan forgiveness. We're going to want to have you all be engaging with us as we will notice your questions or your comments that come to us throughout the conversation. But most importantly, we want to make sure that we're able to give something that is valuable to our students and overall to the young Black students who find themselves often faced with debt choices as it relates to higher education, not necessarily knowing how to navigate those opportunities for debt or the taking on of debt. So without further ado, we want to use our time wisely. I'm going to give way to Ricardo, who's going to start us off with the presentation.
Thank you, Robert. Thank you, Dr. Muhammad, for making the opportunity for me to join our alumni here today. I'm absolutely delighted to be with you this afternoon. Again, as Dr. Muhammad said, my name is Ricardo Jefferson. I am also a Howard alumni. I graduated from the Howard University School of Law in the class of 2005, and I'm always happy to join my fellow Bison in any form. Hopefully I'm sharing the right screen. And I work for the Department of Insurance, Securities and Banking in the capacity as a student loan ombudsman, which means that I work with district residents on issues related to managing their student loan debt. I examine federal student loan and private student loan company portfolios, but I also engage in a fair amount of outreach to help district residents plan for college in a way that avoids or at least minimizes the need for student loans. I briefly want to talk to you about the broad public service loan forgiveness program as it is generally constituted. As you may know, the public service loan forgiveness program is for federal student loans. And this graphic, I think, clearly illustrates generally how it is set up. It is designed to allow for the making of 120 payments, separate monthly payments, that would have been made since October 1st of 2007, which is when the program was first implemented. Payments do not have to be consecutive, so they can be spread through different times of employment, but those all must be full-time appointments of employment, right? And traditionally, payments have to be received within 15 days of the due date, which is different from paying them maybe before 30 days when they may be declared officially late. In my presentation, I've highlighted a few things in yellow that I think that are important for you as participants. The one thing here is that there was a rule change back in August of 2020 on what are called qualifying payments. Prior to August of 2020, any type of prepayment was not counted, meaning that you would have to have made your payments during the first 15 days of the month that the payment was due. Any amount that you made in excess of that, say, for example, maybe attempting to pay 2, 3, 4, 5 months in advance, would not have counted. As of August 2020, the rules were amended to allow borrowers to pay up through their next annual certification date. Now, if you think about it, it makes sense. Under this program, students or borrowers are in what are called Wow. I've been getting over COVID, and apparently I still have a little bit of COVID mind fog, so I want to apologize. But borrowers are in income-driven repayment plans, and those income-driven repayment plans have an annual certification requirement, meaning that people have to certify their income annually. So under the new rule, you can make a payment through your next certification date, but not beyond that. So I think in most instances, most people are not looking to do that, but it is something to know about in case you do receive a lump sum of money and you decide to pay your entire student loan annual amount in one lump sum payment. Now, let's talk about the Public Service Loan Forgiveness Waiver Program, because it is different from the traditional program that I laid out for you. The Limited Waiver Program was announced on October 6th of 2021, and it was announced through the emergency powers extended through the HEROES Act as a result of the COVID-19 public health emergency. What you need to know is that now, for a limited period of time, borrowers may receive credit for past payments made on loans that would otherwise not qualify for public service loan forgiveness. So that is what is most important about this program. So what's different? What PSLF requirements are waived? This is important. If you look at the right column, you will see past payments under any plan now count. So remember, the traditional plan required 120 payments under an income-driven repayment plan, which is represented by the initials IDR. Some of you may have found that you were denied public service loan forgiveness in the past because you were told you either had the wrong repayment plan or the wrong loan type. Those are the two major things that have changed. So past payments under any plan count now. Also, past ineligible loan payments may count, meaning even late payments will now count. So again, under the traditional plan, partial payments, late payments did not count. Under the waiver program, if you made any payments that were late or partial, those payments will now count only under the waiver. Now, what's unchanged? The employment still must have been full-time, right? For a public sector employer, such as government, state government, municipal government, county government, or a 501c3, or some type of the institution of higher education that is also nonprofit. And even though you could have a Perkins loan or a federal family education loan, which is, you may see the initials FFEL in your loan portfolio on your student loan dashboard, those loans will count, but you must first consolidate those into what is called a direct consolidated loan. So what does the process look like? This is an excellent slide to really capsulize, or at least encapsulate, what's going to happen. Step one, I want you to check your loan types at studentaid.gov. You will see most likely the loan types that are listed here: direct subsidized, direct unsubsidized, direct consolidated, or direct plus loan, right? Anything that says direct is good. Anything that doesn't start with the word direct is bad. Notice what we have here in red, FFELP, that means Federal Family Education Loan Program. Those are not eligible. And Perkins, also in red, is not eligible. So what do? Let's look at step two. If you see FFELP and or Perkins among your loan types, you must consolidate your loans. Remember, only direct loans qualify for public service loan forgiveness. What makes the waiver special is the waiver is allowing you to consolidate without losing credit under payments made pursuant to those other loan types that were previously not countable or not considered. Some of you may have been told in the past that you could consolidate, but you would lose credit for those months and years that preceded that date, that it would start the clock over again. Well, under the waiver program for this 1 year period through October 31st of 2022, that is not the case. So you do have to consolidate, but those old payments under those other repayment plans will count, provided you follow step 2. So now let's get to step 3. Use the Public Service Loan Forgiveness Help tool to certify your employment and submit the information for review only after loans have been consolidated. Now, if you don't have to consolidate the loans, obviously you can go to step 3. Now, so where is the Public Service Loan Forgiveness Help tool? It's at studentaid.gov/PSLF. Now, some of you may decide to go on Google and download the PDF version of the employment certification form online. I'm going to discourage you from doing that. That will circumvent the process of getting the data directly from the Department of Education to begin their analysis. Although you can still submit the paper form to the loan servicer, in order to be counted for purposes of the waiver, the information must be received as a data stream from the Public Service Loan Forgiveness Help tool. That means that you have to go online and follow this process. So let's summarize the key changes. Again, past periods of repayment will now count regardless of whether you made a payment, made that payment on time for the full amount due, and it can be on any past repayment plan, right? And also, unless they are determined by the Department of Education to be improper, periods of deferment or forbearance and periods of default continue not to qualify unless they are determined by the Department of Education to be the result of improper servicer steering, which I'm going to talk about now. So recently, on August 19, 2022, the Department of Education announced actions to ameliorate the impact of past forbearance steering. So what does this mean? This means that you as a borrower call your servicer and said, hey, I'm having problems making my monthly payment. And so what does the servicer do? They said, well, we'll give you a deferment of forbearance. And you say, cool beans, great. I don't have to pay the bill for the next 6 months. Well, there's actually a contractual obligation that the servicers were under to inform borrowers about the implications of going into deferment and forbearance. Also, they were supposed to direct people to look at other repayment plans that were maybe more affordable. And last but not least, periods of deferment or forbearance were never supposed to go beyond 12 consecutive months. A review of the servicer's conduct has shown substantial evidence that they failed to properly apprise borrowers of the consequences of prolonged forbearance. And so this has been called popularly forbearance steering. And on April 19th, Department of Education came up with a new policy to try to ameliorate this process. So what's going to happen? There will be a one-time account adjustment for forbearances of more than 12 months and more than 36 months cumulatively toward income-driven repayment plans and PSLF. What this means is that thousands of borrowers will have their PSLF payment counts increase to include periods where evidence shows that they were steered toward a prolonged period of forbearance. What do you have to do as a borrower to get this? Nothing. You don't have to do anything. The Department of Education will review all of the borrower records to determine who should receive these adjustments. When will you see it? If you're going to get one, probably not until the end of the calendar year, the last quarter of this year. Now, if you believe that you were a victim of what is called forbearance steering, and you would like to file a complaint with the Federal Student Aid Ombudsman, you are free to do so at studentaid.gov/feedback. Okay. And so, but again, you don't have an affirmative duty to do that. So what's next? The Biden administration has extended the current pause through the end of this month. But again, an additional extension cannot be ruled out. We don't know yet. Also, all borrowers that were in default will be able to take advantage of what is going to be called the Fresh Start program. So when the pause ends, no borrowers will be officially in default. The Fresh Start program will be published in the coming days, weeks, months, and that will tell borrowers that they are being assigned to new servicers and give them an opportunity to affirm their identity to come officially out of default. This is a tremendous opportunity for people to, again, come out of default and get that off their credit. So this is really a great thing. Also, broad forgiveness of some quantum of student loan debt is looking increasingly likely this calendar year. I've been in several meetings and I've been told that it could be something like this: an income cap of $150,000 for individuals who may receive up to $10,000 in forgiveness, for couples, $300,000, and maybe up to $20,000 in forgiveness. So again, I don't know officially, but certainly this is being discussed at the highest levels. And lastly, MOHELA is now the servicer for the Public Service Loan Forgiveness Program. So any of you who have had your loans with Fed Loan Servicing, also known as FIA or the Pennsylvania Higher Education Assistance Agency, your loans will be transferred to MOHELA if they have not already. If you get an email from MOHELA, please create your credentials and log in. And lastly, what can you do to keep things moving forward? Write a letter to the Department of Education, advocate for yourself, write an op-ed letter calling for change, reach out to your representatives and elected officials at every level, and please, please, please stay informed. For an additional resource, on my Student Loan Ombudsman webpage, I have a webinar that you can actually go online and see at any time and listen. There's also a PDF of that presentation that goes step by step through what you have to do to take advantage of the waiver process. If you are living in the District of Columbia and would like to speak with me further about your student loans and you need any assistance, please feel free to reach out to me at dcloanhelp@dc.gov. And I'm going to turn it over now to my esteemed colleague, Tisa Silver Canady. Thank you.
Thank you so much, Ricardo. And to those of you all who are joining and our district residents, I just want to share with you all that you are blessed to have someone like Ricardo Jefferson in the role of ombudsman. Not everyone has someone that they can turn to get free advice, trusted advice, and know that there's a person who's out there who's truly interested in representing them and their constituents' best interests. So thank you, Ricardo, and I'm so happy to be here with you today. I want to pick up where Ricardo left off and really focus on public service loan forgiveness and show some examples of walking through the steps so that you all can know what the borrower's experience looks like. So give me one moment. I'm going to share my screen. And if everyone can see the screen, all right, we can get started. So I wanted to share, for those of you who might be skeptical, I wanted to share with you that the waiver is working. It's not perfect, but it has definitely changed many lives for the better. The waiver was announced in October of 2021, and prior to the limited PSLF waiver coming about, the Public Service Loan Forgiveness Program had a rejection rate that was hovering around 97 or 98%. So people who were skeptical were well within their right to think that it's, there's a strong possibility that this program would not work for them. So in the first 4 years that people could apply for relief through PSLF, we had about 16,000 borrowers get through. But since November of 2021 until the end of June 2022, that number has increased to 165,000. So that shows you that the waiver has definitely changed things. And if we focus on the area I like to call the DMV, DC, Maryland, and Virginia, we've had nearly 12,000 borrowers who have had almost $800 million worth of federal student loans canceled through the Public Service Loan Forgiveness Program. But this is one of those things where you have to take action in order to take advantage of this opportunity. So the waiver is working. And if you think you're eligible, I would encourage you to follow the steps and apply. So I want to give you an example. This is for a person named Carmen who has worked at Howard University since 2005. She has balances remaining on FFELP loans that enter repayment as early as 2008, and she wants to apply through the waiver for PSLF. We're going to walk through the steps that Ricardo outlined. First, you're going to confirm your employer's eligibility. Second is to view your loan types. Third is to consolidate if necessary. And fourth and finally, verify your employment by completing the PSLF application. So let's walk through this with Carmen. The first step is to confirm that your employer is eligible. Public service loan forgiveness does not happen without work experience in the area of public service. Thankfully, you can verify your employer's eligibility by visiting studentaid.gov/PSLF. There is a tool there where you can search for your employer by their employer identification number. So you can log into your account at studentaid.gov, use the PSLF help tool to enter that employer ID number and search for it within the Department of Education's database. And be mindful that the only employment that matters here is the employment that happened after October 1st of 2007, because that's when the PSLF program went into effect. So when you use that EIN and you search for results, you'll see one of the following results: eligible, likely ineligible, ineligible, and no results. If your employer is eligible, that's good news. They're in the Department of Education's database. If you see the result likely ineligible, don't write yourself off. There could be a chance that you could provide some additional documentation to the Department of Education or their PSLF servicer, and they could evaluate and determine that your employer is indeed eligible. For ineligible, the odds are less in your favor, but if you do believe that your company provides a qualifying service to the general public, I would encourage you to explore that more deeply and consider applying as well. If there are no results, and I have yet to see this, you would definitely have to provide documentation. The key thing to remember here is that while the database that the Department of Education has is a great start, sometimes it might not be complete. So it's up to you. If you believe that your employer is eligible, is set up as the correct type of organization, or provides that qualifying set of services to the public, make the case for it. Try and apply. There's just a little bit more work involved, and you'll have to wait to hear their answer. So if we go back to our example with Carmen, Carmen works for Howard University, and Howard University is a qualifying employer for the purposes of public service loan forgiveness, as are many universities. Now, the second step is to know your loans, because depending on the types of loans you have, you might have further action to take. And thankfully, you can also do this at studentaid.gov. Again, you'll want to log into your federal student aid account and follow these steps. When you log in, you'll see a history of all the aid, federal student aid that you've taken out, regardless of school, regardless of whether the aid was in the form of grants or loans. When you get to that My Aid section, you want to make sure that you drill down on the details of your loans. So go to the View Loan Details sections to see the full loan type for each loan. It's important that you don't stop at the first screen that you see, and that you dig into the loan details of every type of loan you have. Because as you'll see from the images on my screen, if you stop at the first step of viewing your loan, you'll see unsubsidized loan or subsidized loan. You won't see the type of loan that it is, whether it's a direct loan or a FFELP loan. And that's the information that you need to see in order to make your decision about whether you need to consolidate. So we revisit our example. Carmen had FFELP loans. FFELP loans do not qualify for public service loan forgiveness, but they can be consolidated into the direct loan program to gain eligibility for PSLF. So in this case, Carmen has FFELP loans. That means that she needs to consolidate in order to get her loans on track to be considered for public service loan forgiveness. So let's move on to step 3, that decision point. Do you need to consolidate? In the example using Carmen, we know, yes, she needs to consolidate. And again, that application can be completed at studentaid.gov. You'll have to answer several questions and basically walk through the process again of signing a master promissory note and borrowing a new loan. But the consolidation loan is actually a combination of your older loans. And in some cases, you can just consolidate one loan. But the key is to get those older ineligible loans into the direct loan program so that they can get on track for PSLF. When you're filling out the application for consolidation, I just want to share with you some tips. The first thing is, do not delay the processing of your application. You don't want this to take any longer than it has to. And if you're interested in applying for the waiver, you need to make sure that everything is done by October 31st of 2022, and we're approaching September, so time is of the essence. Second, you're going to be given the option to select your student loan servicer. If you're interested in PSLF, you need to select the company MOHELA from that list, because MOHELA is the Department of Education's designated servicer for the Public Service Loan Forgiveness Program. The next thing you need to do is choose a qualifying repayment plan. There are several repayment plans available, but many of them do not qualify for public service loan forgiveness. The income-driven plans are the ones that are most likely to yield a balance for forgiveness. If you already have more than 120 payments, then you might think, well, why do I need to choose a qualifying repayment plan? You never know your count for sure until the PSLF servicer comes back to tell you what that official count is. So you want to make sure that you're on track to have your future payments count toward the 120 that are needed for public service loan forgiveness. The last tip is the consolidation process works much more smoothly if you use the IRS transfer feature. With that feature, you can temporarily leave your consolidation application, go to the IRS and basically grant them permission to share your household income information with the Department of Education so that they can run the numbers for your repayment plans. I know that sometimes that seems intimidating. For some people, it might seem invasive, but it makes things go more smoothly and more quickly. And as we approach that October deadline, you want to make sure that you get your paperwork in as soon as possible. Now, I know that's a lot of words I just gave you about consolidation, so I want to talk briefly about the image because I think this is an easier way to capture what's happening. When you consolidate, you're taking one or more existing loans and you're combining them into a new loan. So let's look at Carmen's example. She's got 2 FFELP loans out there, and we already know FFELP loans don't qualify for public service loan forgiveness. But if she combines them and consolidates them into the direct loan program, her past payment history can be considered through the limited PSLF waiver. So in this example, we have 1 FFELP loan for $30,000, and we're assuming that that loan has 96 months of repayment history while Carmen was working for a qualifying employer. She also has another FFELP loan that has 140 months of qualifying repayment history. If she takes these 2 loans and combines them together, the new direct consolidation loan will be given credit for the number of payments that comes from the loan with the longest repayment history. So she had one at 96, she has another at 140, but when she combines them together, all loans have now been brought up to 140. The good news for Carmen is 140 is more than 120, and 120 is the magic number that you need to achieve in order to gain forgiveness through the PSLF program. So step 4 is to certify your employment. You want to make sure that you complete the PSLF application because this will serve as proof that you have indeed worked in public service. As Ricardo mentioned, it is highly recommended that you use the PSLF help tool. If you choose to download the paper application and fill it out by hand, you're just increasing the chances that you're going to make a mistake that might cause you to miss out on the limited PSLF waiver and cause extensive delays to the processing of your application. So I highly encourage everyone, please use the PSLF help tool. You can find that at studentaid.gov/PSLF. Now, if you use the help tool, a lot of these tips will be taken care of for you. But if you use the paper version, here's some tips for you. The first one is to answer every applicable question. Some questions on the application do not apply to you. And if you answer them, you could cause your application to be delayed or denied. Also, make sure that your application includes both an employment start date and an employment end date. And if you are still employed with a certain employer, you want to make sure that you check the box that lets the Department of Education servicer know that's still your current employer. This next tip applies to the paper version of the application and the version that you will download from the PSLF help tool. And that's to follow the guidelines for acceptable signatures. Even though the forms can be submitted electronically, the signatures have to be hand drawn. The signature doesn't technically have to be wet, but it has to look like one. So a person can't go to the PDF and type their name in italics or a cursive font. That will not be accepted. The signature needs to be hand drawn. You can use your fingertip or a stylus. Or if you have an image of your hand-drawn signature, you can copy and paste it there. But the point is, you can't just type your name onto this form. A hand-drawn signature needs to be present for you, the applicant, as well as the representative from your employer who's going to sign this form. After you've submitted the form successfully, be prepared to wait for a few months. This is not an overnight process. It takes time, but the payoff, I believe, is one worth waiting for. If you're truly interested in applying for PSLF and getting the maximum amount of credit for your past payments and your employment, you need to make sure that you complete every action by October 31st of 2022. Now, the image on the right side of the screen shows you what the paper version of the PSLF application looks like. And I have circled question number 10 because this is one where I see people make a lot of mistakes. Sometimes people will check the box indicating that their employer is a 501c3 tax-exempt organization, when in fact it's not. It might be a nonprofit organization under another section of the tax code, but checking this box yes when the organization is not a 501c3 tax-exempt organization can cause your application to be delayed. In some cases, I've seen people wait for 18 months to get an answer about whether their application would be approved because the PSLF servicer was unclear as to how the organization was set up. You can get around all of that by using the PSLF help tool, searching by your employer's EIN, and then letting the Department of Education port that information about your employer over into the application automatically. So please use the PSLF help tool if you can. Now, back to Carmen for our results. Let's review the action steps. First, she would need to consolidate those FFELP loans because FFELP loans don't qualify for PSLF. The second thing she would need to do is submit that PSLF application to document her employment by October 31st of 2022. The next thing that would happen is upon review, she'd receive credit for those past periods of repayment dating back to 2008. Fourth and finally, she would be approved for public service loan forgiveness, meaning that the remaining balance of her federal student loan debt would be cleared tax-free. As you can see from the image, under original rules of PSLF, she would have 120 remaining qualifying payments. And that's only if she consolidated. Under the limited waiver, all of those past payments would count because Carmen had the employment and she had the repayment history. All right, I want to give you one more example before I wrap things up. One common misconception with PSLF and the limited waiver is that people who have less than 120 months of repayment history or loan or employment history have no use for this program, and that's simply not true. If you have any work experience in public service while you have loans that were in repayment, you too could gain credit for past payments through this limited PSLF waiver opportunity. So in this example, I have a person named Mackenzie who's worked for the U.S. Department of Commerce for 6 years and paid on direct loans under the extended fixed plan for 70 months. Mackenzie is going to follow these 4 steps that I recommend you follow too. The first one is to confirm employer eligibility. We know the U.S. Department of Commerce is a government entity and therefore qualifies for PSLF. Second is to view the loan types. If we look at the situation there, she has direct loans. Direct loans are eligible. The third step is to consolidate if necessary. Since Mackenzie's loans are direct, consolidation isn't necessary. The fourth and final step is to verify the employment by completing that PSLF application. If Mackenzie goes ahead and follows through with those steps, then through the limited waiver, she could get credit for those past 70 months of payments, even though they were made on a payment plan that did not qualify under the original rules of PSLF. So by following those 4 steps, Mackenzie is now 70 months closer to having the balance of her federal student loan debt forgiven tax-free. It's important for people who have less than 120 months to make sure that they're staying on track for PSLF. So in Mackenzie's case, that would mean continuing to certify her employment, hopefully annually, even though it's not required. And then once she reaches that 120th payment, submitting the PSLF application one last time to make sure that she's given credit for all of her payments. The last thing Mackenzie needs to do is make sure that she's enrolled in a qualifying repayment plan so that those future payments count toward the 120 that are necessary to achieve PSLF. All right. So in summary, we want you to get on track for PSLF and stay on track. As for getting on track, you want to make sure you submit that application before October 31st of 2022. And there can be benefits for people who have less than 10 years of employment and repayment history or more. If you believe that you have more than 120 months of history, it's possible that a PSLF application and or consolidation may be the only thing standing between you and having the remainder of your federal student loan debt forgiven tax-free. If you're already on track for PSLF, we want to make sure that you stay on track. That means you have to remain working for a qualifying employer. You need to submit that PSLF application, ideally every 12 months and when you change jobs. And when repayment resumes, which I hope is far off from August 31st, 2022, you want to make sure that you're enrolled in a qualifying repayment plan. In closing, I wanted to show you this slide just so that you could see how the original rules of PSLF stack up to the limited PSLF waiver. You'll see we've gone from 5 requirements down to 2. So the difference is very real. But if you want to get in on this opportunity, you've got to apply by October 31st of 2022. And in closing for real this time, just want to share some resources for the road for you. The applications for everything you need to complete for PSLF can be found on studentaid.gov. You can get the application to confirm your employer and your employment. You can complete the application to consolidate. You can also view your loan types. In addition, please visit Ricardo online at the District of Columbia Student Loan Ombudsman website. You can visit me online at the Maryland Center for Collegiate Financial Wellness. Also, the Student Borrower Protection Center at forgivemystudentdebt.org. And lastly, if you're really interested in what the day-to-day borrowing experience looks like for people who are applying for PSLF, I highly recommend hopping on Reddit and taking a look at the PSLF mega thread, because there you'll see actual borrowers who are coming to give updates on what they're seeing as they're submitting their applications and waiting for consolidations to go through, getting qualifying payment counts. And it's very nice to hear what PSLF looks like in theory, but it's totally different to see what it looks like in practice. If you're interested in that practical experience, please do hop on Reddit and take a look at those borrowers' experiences. They share quite a bit. All right, thank you so much for your time. And I also wanted to give a shout out to my dad, who is a Howard University class of 1970 graduate. And at this time, I will hop off and turn it back over to Robert.
Thank you so very much. So we got a lot of good information. I have some time for some questions as well. So if you have questions, please drop those in the chat. And while we're doing that, I would like to ask the panelists the following question. It may have been covered, but I don't think I heard it. What is the overall loan indebtedness for the population of the United States? And how does that compare to consumer indebtedness, if you know?
So we're looking at 1.6 trillion in student loan debt across the country, 44 million people. And after the mortgage, student loan debt is the single largest source of debt in the country. It surpasses other forms of consumer debt, you know, cars, credit cards, et cetera. So it's huge.
And I see a couple of questions, but I do want to have a follow-up. Do we perceive in our roles in higher education or work with higher education institutions and indebtedness that we might have a bubble of sorts down the road, similar to what we had some years ago with the housing bubble?
So I don't think that the bubble would be the same. The bubble is not the same because student loan debt is linked to something that's not like a house. With a house, at least there's collateral. But with student loan debt, the bubble that I see, I think we've already come to that bubble. And that bubble is where lives start to be affected in ways that aren't necessarily financial. That bubble is people making the decision maybe not to get married, not to have children, not to go into careers that they're truly passionate about because they have financial obligations to satisfy. So I do believe in a bubble. I just believe that the bubble is one of a different nature. It's more about life choices and opportunities and freedom, as opposed to a situation where a market tanks because of it.
Mm-hmm. And Dr. Muhammad, I would like to say one more piece about that debt amount. Now, I was in a meeting with the national team of student loan servicer examiners yesterday, and we were talking about student loan debt capitalization, none of us could think of any other industry where debt is capitalized. And so, when you look at this so-called bubble, it's really artificial because we aren't talking about the sums of money that people actually borrowed. We're talking about interest on top of interest on top of interest. Consumers don't realize this, but every time you change your repayment plan, your debt is capitalized. Every time you change your loan type, your debt is capitalized. Going in and out of school, your debt can be capitalized. So there are many events that can happen over the life of a person that will cause that debt to be capitalized, and people just don't understand. But what they do see is that years go by and they graduated owing $10,000, and then they look up one day and they owe $110,000, even though they've been paying, more or less most of the time, but taking deferments, forbearances here and there because of, life changes. But they can't understand how they can end up owing a six-figure debt on something that was really so small. And I think that's the mythology that tries to vilify student loan borrowers as deadbeats. That 1.6 trillion is not all what people actually borrow to go to school.
Okay, thank you so very much. See a few comments or questions regarding the forbearance steering fix. If we could perhaps drop into the chat some information as it relates to more information on the steering fix, I think that would be a great help. And then also one of the questions is about filing a complaint as it relates to the steering fix. Another question: what options are available for non-public employees as it relates to student loans or trying to get themselves out of this cycle?
So I would look for opportunities at every level of government. I know the government focuses on public service loan forgiveness, but I look at the student loan repayment strategy similarly as I would look to the college financing strategy. You want to look to the federal government. You want to look to the state government. Some states have programs where you can get a tax credit, or you might be able to purchase a home and have student loan debt wrapped into that purchase and forgiven eventually. So federal government, state government, even look at local government options. After governments, I would look at my community. That community begins with my employer. Are there benefits that employer might offer that are specifically designed for student loan borrowers? I would also look to social media. Some people, don't want to put it out there that they have student loans, but there's some companies that are actually looking for people to talk about their experiences and will have prizes. I've seen some for $10,000 to $25,000 looking for people to talk about their debt and the difference that repayment help would make. Unfortunately, the relief for people who work in for-profit careers is nowhere near as robust as what's out there for public servants, but you have to look in order to find those opportunities and piece them together in a way that makes the most sense for your situation.
Thank you. And I think as a part of that, perhaps, can we address student loan forgiveness for schools on a list that have misled students with false claims, or is this session just for public student loan forgiveness?
I can address the, sounds like this person is referring to the class action lawsuit against a number of schools, and the list is too long to run through, largely for profit institutions, Corinthian, Argosy, and a number of others. So the main thing that needed to happen with those schools is you should have completed a borrower defense, a borrower defense to repayment application, a BDR, borrower defense application to repayment. And I believe it should have been dated by April of this year to be part of the class of people who automatically receive forgiveness under the sweet decision. That was a court case. And there is a matrix available that goes through, and it has a series of questions that you have to ask to figure out if you are in the class. But I begin with the first question. Did you ever complete a BDR application? If you didn't, just because you went to that school doesn't mean that you get it, okay? You had to have already You didn't have to ask to even be in the class, but to be a part of the class that's getting that forgiveness that was listed, you have to have made the application within the prescribed timeline. Now, what I'm telling people is this: if you went to one of those schools, you can still complete the borrower defense to repayment application. And I would encourage you to do so. The fact that the school is on the list is indicia that you can make out the prima facie case, but you need to go online and complete the borrower defense to repayment application. There are several legal clinics that are available to help people complete the BDR application, and they vary. One in the District of Columbia is ZEDEC. It is the ZEDEC legal clinic at UDC. And ZEDEC is spelled TZDEK. They charge on a sliding scale. And so they can help you. But you can also do your borrower defense repayment application yourself. It is a time-consuming process. I think it's like 25, 30 pages. It's really, really long. So don't think you're just going to go online and fill it out in 2 seconds and be done. This is going to take some intestinal fortitude. My recommendation would be print out the BDR application, read through it, don't get upset, and work on it a little bit at a time. It will take you some time to do it.
Okay, thank you.
Mhm.
Another question is about school responsibility. And do we have any responsibilities as places of higher education as relates to some of this that's occurred around the indebtedness? I have my thoughts on it, but I'd like to hear your thoughts as panelists.
I think that the cost of higher education has definitely risen and outpaced inflation, among other things. And I do believe that some of that responsibility has to be laid with schools. But at the same time, we have to acknowledge that the federal Pell Grant has failed to keep pace with the cost of living. So whereas someone maybe 50 years ago could depend on the Pell Grant, well, Pell Grant's just about to turn 50, okay? Several years ago, a person on a Pell Grant could have, most everything paid for. But at this point, I think a Pell Grant's purchasing power has dropped down to maybe a third of the cost of a year for higher education. So the federal government support has not kept up. At the same time, we've seen states disinvest in higher education. So the cost has always been higher, but there was the federal government and there was the state government there pitching in. And now that they've pulled out or they've reduced those levels of funding, the burden has been left on students and families. So I think that there's enough responsibility to go around. But in terms of fixing this, I really do believe that the federal government and state governments need to step up, and people need to stop making this discussion one of individual responsibility or individual fiscal irresponsibility, because there's no amount of ramen noodles or building a budget that's going to help you scrounge up $60,000 a year to pay for school and living expenses. So I think responsibility has to go around.
Right. I couldn't agree more. Again, the Pell Grants have not kept up. Many of you in here, your children probably are not Pell eligible anyway. And so for people who are not even Pell eligible, who are middle income, you feel like there is no support. What I tell families, you have got to, the one thing you can do is start a 529 plan wherever it is you live. You have got to get involved in planning, and you cannot start soon enough. If you found that, in our community, many times we don't even make what we consider to be enough earnings to begin to put any money away until oftentimes we're in our 40s and 50s, right? I mean, that is an unfortunate reality. But what I tell parents is, even if your children are in high school now, you can still start a 529 plan and let your students get federal student loans. Now, listen to me, don't yell. Let the students take out the loans. And then when they graduate, you can take the money that's accumulated on the 529 while they were in school, their last few years of their years of high school, plus their years of college, and then pay them off for them. Notice I said, let the students get the federal student loans. I don't want parents getting Parent Plus loans unless it's maybe like the last semester of the last year of college. That could be a whole nother conversation. But parents, if it ever comes down to your child getting a federal student loan or you getting a Parent Plus loan, let your child get the loan. You can always pay it for them. There's one main reason for this. The terms for repayment are far more favorable and the interest rates are lower for the student. The Parent Plus loan is due, I think, 60 days after origination unless you defer it. And if you defer it, guess what? It's unsubsidized. So the interest is going to accumulate immediately and then it'll be capitalized later. So the Parent Plus loan, I think, is a great tool. Again, if your child is at the end of their career in college, or maybe, you're getting them in the first year, but maybe you think there's going to be some scholarship or something. It should not be part of a comprehensive 4-year strategy is what I'm trying to say. Because it's going to put you in a bad spot. I've worked with parents who got them instead of letting their kids get the loan thinking, well, I want to pay. But it's like, it would have been better though if you had simply paid their loan. So there are things that we can do to put ourselves in a better position. I think also putting more time into college selection, not making an emotional decision, understanding what the family income looks like is also very helpful. We often go to school from an emotional space. That's not it's not a sane financial decision. And I think going to college is a financial decision. More of us need to treat it as such, especially given the stakes.
And I would just offer that, as I said earlier, advocate, use advocacy at the state and the federal level, have conversations if there are ways to have forums, because some of what we're doing is siloed. People are not hearing it beyond certain venues, and some don't care to hear it, quite frankly, because it's an irritant. But unless we're able to have these kind of conversations and talk about the real issues, and that includes the requirements for schools to have some skin in the game. I think Senator Lamar Alexander wanted that at some point in the recent past. Other senators have asked for it, congresspersons. But also, schools have got to recognize that, well, parents must recognize that schools are a business. Every aspect of what we do is a business. And as we look at that, to what Ricardo said, we have to make business decisions for the best for ourselves. And at the same time, recognize that we can have conversations to try to normalize some of this, because it's been out of control now for about 30 plus years. We haven't been able to have Pell keep up with the cost of attendance since the early 90s. And that's at the very latest. So we have to have some broader conversations around this. Another question. I have direct loans, unless someone's already, maybe you've already answered this one, Ricardo. I believe you have. Let's see. Anything we haven't answered yet? Would you please repeat the difference between the original PSLF versus the limited PSLF waiver?
In 2 or 3 words, the biggest difference is under the old program, you had to have a direct loan, period, right? Direct loan under an income-driven repayment plan with the qualifying employer making 120 payments on time, which means within 15 days over a period of 10 years. The new program, for only 1 year, it doesn't matter what your repayment plan was. It doesn't matter what the name of the loan type was. It only matters that you paid. It only matters that you had a qualifying employer at the time. Now, for this time period, you can consolidate those loans into a direct consolidated loan and count that time. But this is only through October 31st of 2022. For those of you who may be married in here and file jointly, I want to offer this because some of you may owe and some of you may not owe. You will see a requirement for the spouse to co-sign on an income-driven repayment plan. That is a misnomer. When a spouse signs the income-driven repayment plan, what the spouse is actually doing is they are affirming the joint income of the family. And they have to do that by receiving a code. and they're going to log into federal student aid to fill it out. I have recently worked with a woman whose husband flatly refused because of the term cosign. I've asked the Department of Education to reform that part of the form, because it's not a cosign, right? It is a declaration or an affirmation, but it is not an acceptance of financial responsibility. And I'm willing to say that as a licensed attorney, that that co-signing line is a misnomer. So if you don't take anything else from that, those of you who are married and file jointly, please know that.
Thank you. We have a inquiry from a student in the School of Arts and Sciences. Will there be a complete overhaul of the student loan program moving forward? It really needs one to make education more affordable. Student loan debt have deferred a lot of my personal dreams.
Yes. I mean, the short answer is yes. We have just ended a comment period. There will be new rules rolling out next July, which is the time of year that the new financial aid school year essentially begins. So the rules will probably come out around February, and will go into effect next summer, next July. Dr. Muhammad, what is that? What is that date? Is it July 1st? Isn't that the actual date that is the new financial aid school year? I want to make sure I'm right. Yeah.
Yes, that's correct.
So negotiated rulemaking just ended. The last day for comments is actually today. The new rules will come out the first of the year, and they will be implemented next July. That's why it's very important, again, for you guys to continue to work and advocate for yourselves. Now, that doesn't mean you can't continue to advocate for change and reach out to your state leaders, as I suggested in the slides, and as Dr. Muhammad has also chimed in to say. So please continue to agitate and press.
Yes, we have about 3 minutes left. I would like we already have some responses coming to the questions from our panelists. We will also have the opportunity to have this information or this webinar available so folks can go back and review it. So just know that we are listening and hearing, and we want to make sure that all the information we provide is not only as best we can instantaneous, but also you'll have something to go back to and review as you would like. Any final comments from our panelists? Anything that we haven't covered or whatnot? And I will say, please call me Robert.
Okay.
I prefer that so much more. And actually, I'm in the process of completing the doctorate. So I thank you for the blessing. It's coming. But please, I'd always call me Robert. Titles have never been a thing for me.
Okay. As we haven't met prior to today, I always like to give people their respect, especially my people. So many times we don't feel respected. So
I appreciate
when I have the opportunity to provide that due respect, I give it every time.
Thank you. So any final comments or thoughts before I thank you both very much for being with us today?
I have two. The first one is for everyone in general when it relates to student loan repayment, and that is to not underestimate the importance of having a strategy. Unfortunately, this is a complex space that we are occupying here. This is not just like somebody loaning you $10 and you pay them back $11 next Friday. There are several options. They need your spouse to affirm information. There's capitalization, there's forbearance steering, there's income-driven repayment options. This is something that it's complex, and it requires you to be an active participant in how you approach this debt. So please do get involved. I know sometimes people just want to ignore it, and the payment pause has made it easier to do that. But it's important that you have a strategy so that you can see a way out of this debt. And that strategy should take advantage of other people's money as much as possible. The second thing I'd like to say, especially regarding PSLF, is just don't write yourself off. The program has a lot of rules, but some people just look at it and say, this is too complex. I don't feel like it. I met with someone yesterday who just had $113,000 forgiven. And our journey together started 2 years ago when she told me, I can't take this. I don't want to look at it. I'm just over it. I'll repay it. And it took a long time, but that payoff is definitely worth it. So if you have the employment, you have the loan history, please do apply. Don't write yourself off. If anybody's going to say no, let it be the Department of Education and their servicer, but don't say no to yourself.
Mhm.
Thank you.
Thank you. And Robert, I would like to say one, if there's still time for me.
Yes.
I would like to encourage everyone to not beat themselves up about being a professional who finds him or herself mired in debt. This is not a personal failure. This is part of a systemic breakdown that we've already talked about. And there's a state part, there's a federal part, and there's even a school part, right? So there's a lot of moving pieces here. Beating yourself up is not going to solve the problem. What I want you to recognize is that this process is a marathon. It is not a sprint. You don't have to have all the answers on day one. You don't even have to understand all the issues on day one. You do have to get started and know that there are partners out here who are qualified to provide you with information so that you can make the best decision for you and your family. And the only way to get in front of this debt is to get started. There are loan calculators that you can look at. I encourage you to do the ugly, painful work of going to studentaid.gov and using the loan simulator. Take a look at what different repayment plans look like in terms of the month to month, and then look at what the eventual payment will look like in 10 years, 15 years, 20 years, because the days and the months will add up whether you're working on it or not, right? So let's get in front of it. Know that there's strategies, and all you can do is I just want you to get started. So get unmoored. Put your fear in the pocket. If you need to call someone and cry, it's okay. People call me and we cry. I've cried with people. It's okay. It's emotional. You're talking about something that may be greater than your house note. You're talking about something that might keep you from getting a house, right? Yes. So this is emotional. It's okay, but let's go through the emotion and do the work and come out on the other side. And I just really want to leave you with that.
Well, thank you so very much. I do think another part of the conversation, hopefully we can have at some point, is about students being engaged to complete their education in a timely manner. Getting through the process as quickly as possible. And states are looking at this. The feds are talking about it. Actually, arguing some benefits as relates to Pell Grant for students to receive summer opportunity for Pell if they're eligible. But I'm also glad that they say Howard has that same thought process. 15 semester hours per term in order to get students over the finish line as quickly as possible. So that's another part of the conversation.
Absolutely.
We'll close here. Thank you so very much, Tisa and Ricardo. Thank you to Howard University, and thank you to our Bison family. We really appreciate it. This has been a wonderful experience, and we hope to do it again. If you would like to hear more about financial aid, about loans, about how all this works, we have experts that are more than willing to have these conversations to share with parents and students so we can all get through this together. Thank you again. Have a blessed weekend. Happy Friday. Blessed weekend.